welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on US industrials, and our guest is John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. This $3.1 trillion sector's role in the manufacture of defence, energy and transportation equipment places it under investor scrutiny over the fallout from Russia's invasion of Ukraine. While the S&P 500 Industrials Index faltered along with the rest of the market after the invasion, it recovered much of that lost ground and has outperformed the wider market. This is a sector that includes all major US defence contractors, such as Raytheon and Lockheed Martin, but also airlines and railways, agricultural equipment makers, and big names in aerospace, such as Boeing. Interestingly, it doesn't include automakers, which sit alongside the likes of Amazon under the consumer discretionary segment of the S&P 500. But the outlook for industrials is less than certain in the face of rising global interest rates, pandemic-era global supply chain problems, and geopolitical tensions that could stretch far beyond Ukraine to include countries like China. So, how should an investor approach this sector? Let's ask Oppenheimer Asset Management's John Stolfus. John, hi. Let's start then with the direct impact of the war in Ukraine here. How has it changed your outlook on the sector?
Well, we'd have to say it actually enhances our outlook on the sector because the industrial sector contains, as you mentioned at the opening, many of the companies that are deeply involved in defense, whether it is space age type defense or traditional military equipment or home security, what have you. The industrial sector is very much involved here, and it's part of the solution to many situations.
The industrial sector, though, also manufactures consumer goods, of course, for use in the home. Are you concerned that rising interest rates and inflation, leaving Americans feeling like they have less money in their pockets, could affect demand in parts of this sector?
Well, without a doubt, Elena, I think we've already seen the consumer has sort of come off the boil. Their sentiment has soured somewhat. But actually, when you look at the Michigan consumer sentiment survey and even the conference board, you see that it's really, they've just lessened their enthusiasm, curbed their enthusiasm, so to speak, and with a thought that likely as inflation is brought down by the efforts of the Federal Reserve, which we hope will happen, we expect that this will not be a big issue for the industrial sector. It's also many times when people when they buy an appliance, it's a longer term investment, and they tend to be less likely to postpone it.
I know you think that in the slightly longer term, industrials will be at the heart of the new normal as different national security concerns start to upend the global trade landscape. Can you explain that?
Oh, very much so, Elena. We can't help but think that, you know, when we look at what we need to do in the United States, for example, right now, we need to build more chips at home. We need to build more healthcare, diagnostic equipment and things. And behind all of this stands the industrial sector because it's the machinery that's used for execution of all these processes. And as a result of that, we think you want to own industrials here in a well-diversified portfolio. Right now, have been over the last, exceedingly so over the last 10 years, increasingly dependent on China or one country-centric supply chain. And the whole world is right now. All roads lead to China in many ways, but it needs to be diversified. And as a result of that, there's many different countries that will benefit from this, both in the emerging markets as well as the developed and home markets, particularly with strategically sensitive products.
How exactly are we seeing US industrial companies change or move their production, especially, of course, with the global supply chain disruptions we've seen over the past couple of years because of coronavirus?
Well, it's been a slow process, Elena, but now, if anything, I think the pressure is on to do it not only from a sense of the administration, whether it was the Trump administration previously or the Biden administration currently. But I think both the pandemic as well as this situation in Ukraine has accentuated. And we must remember that industrials, very important to the energy business. And if we start pumping energy more enthusiastically in the United States to serve the rest of the world, that should be good for industrials as well.
Thanks so much for that, John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. Well, before I go, here are some of the top stories in this space. Japan's Toshiba is facing an unclear future after shareholders knocked back rival proposals on the future direction of the conglomerate. Shareholders voted down management's plan to spin off Toshiba's devices unit and a separate call to seek buyout offers after both proposals failed to gain 50% of the vote. The untidy outcome ensures there will be no immediate end to a 4-year battle between management and activist hedge funds, although those funds expect to nominate their own investors to the board and continue to push for a buyout. Airbus says it expects Indian Airlines to order more than 2,200 planes over the next 20 years, up from a previous forecast of 1,900. With low-cost carriers making up the bulk of the Indian market, Airbus expects airlines will need nearly 1,800 narrow-body planes to grow fleets and retire old planes. Airbus cites India's domestic and international travel market, which is expected to grow 6.2% per year over the next 20 years. And Daimler Truck said it expects little impact on its business from the COVID-19 pandemic or the Russian invasion of Ukraine. It also forecast revenue growth of at least 14%. Daimler Truck split from the newly renamed Mercedes-Benz last year. It said semiconductor shortages and other supply chain problems would weigh on earnings, but said the invasion would not have a significant effect on its supply chains or market development. Daimler froze its business activities in Russia on the 28th of February. And that's your roundup of the industrial sector. I'm Elena Casas, and this is Reuters.